Mupala sir?
Yeah. Kapil, is it audible?
Yes, sir. Yes, sir. It is. Please start.
Hello. Yeah. A very good morning, one and all. First of all, let me welcome our guest today, CA Pramod Jain sir, and two faculties of the day, Aditya, and the next faculty is about to join, and the BOS team for taking all the effort, and especially for the beloved students. Welcome to the 14th practical training module. And week on a week, let me share, the numbers are so increasing, the students' participation, the advantage what a student is getting, that itself is an indication for the success of the program. Though it is a Sunday, though it's one part of the day we get in a week for a holiday and all, but still, the interest which students have shown up is real motivation to the entire BOS team to work it out for you and design in such a way. Why? Because as we all of know that in addition to the theoretical education and the articles training, what you get, the current trend of the technology that is taking place and the kind of portals what we have seen in both income tax, GST and MCA portal, we felt that a practical training module is a need of an hour for the students. So as per the council direction on this thing, the BOS operation has taken up a weekly training module, and now we have successfully entered the 14th week. The kind of response, Pramod sir, is being increasing a week on a week basis. And not only we have the students on a live basis, but also a lot of views are there on the recorded part. And today, sir, we are going with the income tax. All of you know that the topic, income from business or profession. So there's a core area where every practicing chartered accountant and the article training would be looking at. And today we have two learned speakers with us, Aditya and one more, Ranka sir, will be joining us. So both of their expertise and experience will add a knowledge to the student. I request all the students also during the session or at the end or on the message chat box, if you have any questions, so please ping into that. The faculty is over here and they are very senior enough to answer your queries and will be happy enough for that. And today we have our guest, our council, my council colleague, Mr. Pramod Jain sir. So let me welcome Pramod sir. Pramod sir, if at all I have to say an introduction, only two things are enough. He is the chairman of the two important committees, one Accounting Standards Board and other Expert Advisory Committee. So thank you, sir, for taking out your time. We request you to kindly have your valuable words with the students today. Thank you very much, sir.
Thank you very much, CA Sridhar Mopalaji, the Vice Chairperson of the Board of Study Operations. The two speakers today, one Aditya Pradhanji, second Yogesh Bankaji is yet to join, and the whole secretariat of the BOS. In fact, Sridhar sir, you are doing a fantastic job of this practical training, which is being imparted. Then this is the 14th one today, and on the eve of 75th, our Independence Day, on 14th of August, Sunday, and 15th Sunday, so long weekend, and still the speakers are here, the students are here. So my heartiest congratulations to each and every one of you on the 75th Independence Day. And the topic which today has been chosen is a very, very important one under the income tax, which is the income under the head business and profession, which we normally call as PGBP. And out of the five heads, if I talk about the salary, house property, business, capital gain, and income from other sources, this PGBP is one of the very, very important one, because most of the, I would say, interesting aspects are there on the PGBP. Salaries, yes, the students might initially find, because many of the number of assessees, if I say, are more into salary income. But PGBP is the main head under which the India gets its GDP, its income, the corporate taxes. So the revenue for the members out there is more in PGBP as compared to the salary on the other way around, because then they make this computation from section 28 to 44 DB, and then the further deductions, then the assessments. Assessments of salary, etc. are a bit simple, but for the business, you need to go into which head, what taxation rates, corporate tax, partnership tax, and so many taxes. So the headings of the PGBP itself, what is business, what is profession, then the tax audit, that is also under these sections only. So everything in relation to business is PGBP. So students, I'm very sure you'll be having a great time with both the speakers today. take these subjects and very, very practically what they will be talking, and then put that into practice when during your articleship period, because the time is coming. This August, September, and then October will be filing the income tax returns, the tax audit reports, the TP audit reports, everything, transfer pricing, everything evolves around PGBP. So it would be very, very fruitful session today. After this session, I again request that you put that into practice while this articleship period of next 2-3 months. We say season. So this is our season for the chartered accountant articles, and never hesitate to sit late during this time. During this time, it is always a learning experience where you sit at 11 o'clock, 12 o'clock, 2 o'clock, and in the end days, even with the whole night, the articles who are doing it are really enjoying that time, because these 3 years of articleship are very, very important in your life. Enjoyment, of course, later on you can do, but this is also enjoyment in a group when you are working and putting your knowledge to the impact. This is the time you will be getting. Suppose you become a chartered accountant tomorrow after clearing the exam, then you won't be having this area, what you will be doing in the articleship. So enjoy. My best wishes to each and everyone, and thank you again, Sridhar sir, for organizing such innovative idea and doing that on a regular basis on the Sunday. The whole BOSS secretariat and the chairperson and the vice chairperson, I really congratulate you for this tremendous task which you are doing. Thank you. Have a great learning. Thank you.
Thank you, sir. Thank you, Pramod sir, for your wonderful words. And student, let me share about Pramod sir. If at all I have to talk about anything technical aspects in the institute, what you're looking towards accounting standard, and all the standards which you're learning today for the examination, sir is the chairman for that. And any areas of a guidance required, ESE is again there. So he's leading both the committees. He took out his time from the council meeting and joined us. So thank you, Pramod sir, on behalf of all the students and BOS committee for your valuable words. Now I request the BOS team to take the things forward. So Smita, unmute.
Yes, sir.
Yeah.
Thank you, Pramod Jain sir, and thank you, our Vice Chairman, sir, for taking such a beautiful session. And today, for today's topic, as rightly said by both the sir, is a very important topic and a common area of interest for all of us, as it involves income, and income is in interest of everyone. So, income from business profession means any income that is shown in the P&L account after taking into account all the allowed expenditures by an assessee. So, students, this is a very important topic. Please stay tuned and pose as many questions as possible to our renowned speaker today, who is CA Aditya Pradhanji. Let me introduce him to you. CA Aditya Pradhan sir is having more than 7 years of experience in the field of taxation and is a proprietor of a renowned company. So he'll be taking a session for the day. I invite sir, please come and join us for the session, and please enlighten the students with your valuable ideas and topic on and the topic and the ideas, valuable ideas on the topic. Thank you, sir.
Thank you so much. I'm audible?
Yes, sir.
Yes.
Yes, sir.
Okay.
Yes, sir, you are audible.
Okay. Thank you so much for the such a nice introduction. Thank you, Pramod sir. And before I start, first thanks to the entire Board of Studies team for organizing such sessions. When I was told to take this session, I was also pleasantly surprised that ICI is taking such a nice initiative, because what happens is that over here also my interns have a lot of knowledge, maybe bookish knowledge, I would say, but at the time of doing some practical aspects, when you're trying to put that knowledge into practice, it becomes a bit difficult. So I feel that this is a very good initiative, because I think that bridges the gap between the knowledge and what we need to do on a practical level. So today I'll try my best to cover the topics which have been provided on as much practical level as possible. So I'll share my screen. Can we see the screen?
Yes, sir.
Okay. So today's session is regarding income from business and profession, and as Pramod sir said, PGBP, profit and gains from business and business and profession. So again, I'll just add to what Pramod sir said over here that I think this is the most interesting, the most litigated, and the most contended topic in our litigations. And because it is in so much of depth, and because of course it brings most amount of revenue, so the issues which comes up in business and profession are the highest. So for today's topic, what I have tried to do, since this is an introductory topic, what I have tried to do over here is firstly give you a complete background of how the whole sections in the Income Tax Act have been placed, means how the entire topics have been come up, how the sections have been arranged in this way. The first section is section 28, which is income chargeable to tax. The second one is basically a very simple one, section 29, how to compute. Section 30 to 37 provides all the admissible deductions. What deductions are available, how to take these deductions, how much to take the deductions, etc. Section 40 are mainly inadmissible deductions, such as section 40B, what is the amount of remuneration you can take. If the TDS is not deducted, then the expenses are disallowed to some extent, etc. Section 40A talks about some of the expenses which are not deductible. Section 41 talks about certain incomes and profits which are chargeable to tax. And there are, again, there are some other provisions as well, which are regarding other provisions such as TDS provisions, 194, 44AB provisions, audit provisions, presumptive taxation provisions. So today, over here in today's session, what I have tried to do is basically give you an snapshot of what income would be and what are the major expenses. Since this is an introductory topic, I'm not going very deep into any expenses, but I will be giving you a snapshot of important expenses, which mostly will cover 70 to 80% of the expenses which you would face in practical scenarios. Over here in section 30 to 37, I have not covered expenses such as which are very industry specific, maybe of tea, coffee, rubber, 33 provisions, 35 scientific deductions, etc. They are very specific industry related. So I have taken more of a general scenario, expenses which are applicable in general scenario. And I have tried to cover important budget amendments as well regarding these provisions, which I will be discussing. So overall, what we will be talking today is what is business and profession? What is the difference between business and profession? It's very important to know what is the difference between a business and profession. What are the allowable and disallowable expenses, major allowable and disallowable expenses from section 30 to section 37. Then I will be taking presumptive taxation. What is presumptive taxation? Which are the sections covered? How we can take presumptive taxation, the practical aspects of it. And of course, another very important is audit applicability under section 44AB. So how the audit is applicable and under what section, what is the turnover criteria, etc. Okay, so let's go ahead with this. First one, what is the difference between business and profession? Many people, many of you must be thinking that, okay, income or a profit, whichever is coming, can be a business or can be a profession. Or why do we need to know the difference between it? Because anyway, the profit from both business and profession are going to be taxed under the head PGBP. So what is the need to know the difference between business and profession? So over here, it is very important for us to understand what is the basic difference between business and profession is because of the audit applicability. The audit applicability, the turnover criteria for business is almost 1 CR, Whereas 1 CR and 10 CR, we'll be discussing it in detail later on. However, for profession, it's just 50 lakhs. So for you, on a practical scenario, if your principal is asking you for that assessee, if the audit is applicable or not, you should be able to understand that whether the particular business in which the assessee is there is a business or is a profession. So what is business? Business is basically any trade or commerce or manufacture or even any adventure which relates to trade, commerce, and manufacture. Trade, commerce, and manufacture would mainly include manufacturing activities such as give and take. You buy certain items, you manufacture certain goods, sell it off. Trade would be buying and selling. However, this is business. Even any adventure of such kind, like for example, during a year, such purchase and sale, it may not be the case that for the whole 12 months you have been having this business. For just such a trade or such a business, you're just doing it for, let's say, 1 week in a whole year. Then whether the income you would have received from such a trade or profession or such a trade, such an activity can be charged under business and PGBP, yes, because even if it's an adventure, like say it's a small activity just done once or twice, there are many other conditions which the courts have laid down, many other conditions we need to see the intent, etc., etc. I'm not going into that, but you need to see that even if it's one time thing, so then also it would come under PGBP. What is a profession? Now, profession is basically something which requires some kind of learning or some kind of skill. For example, chartered accountants, us. We have our learnings in our tax, in finance, in accounting standards, costing, etc. So based on this learning, we are able to provide some services. That is profession. Income Tax Act does not actually define profession, but as per section 3236, it says that the profession includes vocation as well. So vocation means something, basically an activities which are performed in order to earn the livelihood. For example, someone is into Bharatnatyam, something like that. So it's a kind of an vocation. So, and that as per section 236, some in dancing or something like that, that's a vocation. If someone is something, then it's covered under profession. So there is no definition as such, but as per our general parlance, profession is basically something which requires learning, it is a skill. Now, it is very important for us to understand the difference between a service and profession. For example, I'll give you a classic example which happens all the time. A doctor providing certain advices to people, that is a profession. But sometimes in an hospitals, there are services such as ambulance services. There are some other services as well, which are not actually relating to the medical profession, but there are certain other services. They may give some ambulance services or etc., etc. So then that's the main difference between a profession and a service. A service is basically something which you do, but it's not actually, there is no trading of goods. You are giving them a service, but some services does not require some skill, such as maybe we can say tailoring services. You may say it requires skill, of course, but not actual skill or learning. So tailoring and etc., we normally do take it as business. So it goes into the services part as a business part. So business includes manufacture, trade, services, whereas profession is something different, which would be which you can say which has a learning, someone has a degree, etc. Like a lawyer, doctor, architect, technical consultant, engineer, etc. So that is the major difference between business and profession. And again, I will repeat this. It is very important to know this difference, mainly because of audit applicability. if there is a mistake from your end to classify this a profession and you mistakenly classified it as a service, then the audit applicability change. Then it may happen that the person was liable to audit and you did not do its audit. So that's why it's very important to understand what is the main difference. So from business and profession profits, I'll just take some general aspects also over here. Where, what kind of profit should be included in PGBP? Capital receipts are not taken in. Capital receipts are not. Mainly, only the income part of it is taken. You might say a business is there in which we trade not for money, but we trade on goods basis, barter trade. And whether that is included in PGBP, yes, it is included. You give a good, you take a good, that's also included. Voluntary receipts received by any person because of his business or profession, then also it can be taken. Now, I'll give you an example of voluntary receipt, and this has happened in the past, and there have been many case laws also. What has happened was a lawyer fought a case for a company regarding certain provision, and because of his skill and everything, he won that case. And since he won that case, the applicability of the provision was helpful for many other companies as well, and they voluntarily gave him some money. Okay, because of you, we are also in such a profit, so this is something from us. Now, whether such voluntary receipts are also PGBP? So yes, because those voluntary receipts are directly linked to his business, and that's why they are PGBP. So even if you may not be directly providing a service to someone, but someone might have benefited from it, or because of certain services or profession or something you might have done, someone else is giving you something. But then also it is considered under PGBP. Legality of profits. You earn profits from an illegal business. Then even if it is an illegal business, then also it has to be taxed, and that too under PGBP. Even if it is an illegal business, then also. So the income part of it is completely has to be considered. So the legality does not matter. You cannot say, no, it is not illegal. It is an illegal business, so I'm not going to tax it. No, it has to be taxed. Okay, TDS. Now, how do practically, you would ask me that, tell me a practical way of differentiating between a business or a service with a profession. So a normal parlance, it may not be right in all the cases, but as a practicing professional, we do always check what 26 says the vendor TDS has done for us. Section 194C deals with TDS on contracts, which includes services, and 194J in TDS on professionals. So normally the people who do TDS on professionals are normally involved in some or the other professional. 90 to 90% of the time the TDS directive is correct. So you can rely on that. So it can be a practical place for you to start, so at least to understand, okay, now what has the other person done, whether any TDS has been done. If yes, then okay, then if it is done under 194J, then you can start thinking from that angle. Okay, it's a TDS from 194J, so it's a profession. So start thinking from that angle. So going from this, okay, yeah. So now I will be covering some of the important allowable and disallowable expenses over here. We have now covered some incomes. What are the majority of the income that would come? How are they taxed? What are the profits to be considered, etc. And now I will be just considering what are the major expenses over here. And while covering these expenses, I will even try to provide you with some practical background, or even I will try to provide you with some practical cases which I have seen in my my practice, and how do we do it practically, all these expenses, how do we check these expenses practically. Okay, starting with section 30. These are the specific expenses which are allowable. Section 30 to section 36. As I said, I would be covering major expenses from 30 to 32. 33, 35 are very industry specific related. I'm just repeating again. I have not covered them over here because I don't have a lot of time to go in depth into this. So I've covered basic expenses, expenses which will be practically applicable in almost all of your clients, something like that. They are very industry specific, 33 and 35, etc. So I have not covered them over here. Okay, starting with section 30. Section 30 is about expenses of rent, rates, repairs, insurance for buildings. A person, an assessee, has paid a rent for the premises which is owning. The most important thing what you need to check over here in a rent is check the rental agreement for the rent. Always from an assessee get his rental agreement and check whether the rental agreement or the rent paid is for business or business and profession related or not, whether it is used for commercial purposes, because this is the most important condition, I would say, to claim this expense. Check the rent agreement over here. You can claim it only if it is the premises are used for business and profession. Many times it has happened with us that assessees gives us rent and ask us to claim expenses, and we get to know that the rent has been actually paid for his residential premises. So we normally never take that. Then, okay, this is again an important point. Now, for example, this rental, this premises, you are owning this premises and you are doing some business from it. You may say that I, in my personal capacity, I'm owning this premises, and can I pay rent to myself? For example, take a deduction from business and profession and consider it under house property. Can I do that? So the answer over here is no. You cannot do that. You cannot say that this premises is owned by me and can I pay myself some rent? So no. In order to get some expenses in PGBP, you might take a contention that, but no, you cannot do that. However, if it's a scenario wherein it's a partnership firm, the partnership firm is running his business from this premises, and that partnership firm is paying rent to its partner because the premises is owned by the partner, then such expenses are allowable because the entity over here is completely different. The entity is a partner. It can be a related party transaction. Certain sections, 40 sections can come into place, whether the rent is accessible or not, is excessive or not. But that's a different argument altogether. Prima facie, the rent expenses is allowable. Third point which I would like to share over here is books of accounts. When you do any audit and you come across rent, make sure that always check the rent amount in the previous year as well, because this has happened with my interns also many times. What happens is normally when there is a change of premises, there is a element of security deposit also over here. So what happens is security deposit, the old security deposit is given back, you go to somewhere else and the new security deposit is given to you. Now what happens is that the accountant in the business doesn't understand all this nitty-gritty. So what he does, okay, kuch aaya security deposit, that shows that the security deposit which was issued is showing in the balance sheet as a current liability, and it is adjusted with non-current liability, it's adjusted against that, and the new security deposit which is given is mistakenly shown as rent as well. So over here we need to check two things. One is the rental agreement and bifurcate this security deposit and rental expenses. Because it's a very common mistake which accountants in business firms does. And when you are doing the audit, make sure that this does not happen with you. So check the rental agreement, ask them whether the rent has been changed. There are some increment clauses also in the rent. Let's say 5%, 10% every year, something like that. So why am I telling you to check the previous year's balance sheet is because if there is a security deposit also included in rent, then the rent increases, the rent shoots up a lot. Means there is just one entry which is you big entry and all other are small. So you get to know that. I'm just giving you some practical ways in which you can understand, identify such mistakes. There are like 30,000, 30,000, 1,50,000, 30,000, 30,000, 30,000, 30,000. So you understand this 1,50,000 is something different. Maybe it might be like the rent is provided for 3 months, but then check whether actually it is that, or if it is a security deposit. It's a very common mistake. Okay, going back, rate, taxes, repairs, insurance. Okay, all these are very common expenses, and this would be allowed to you if the premises in which you are staying in, not staying in, the premises which you are using for your business is for your business. All these expenses are allowed to you. Repairs for buildings, there is always a big fight between the consultants. What happens is sometimes there is a building, maybe a 3-floor building, and with the consent of the lessor, the person over here has built 2 more floors over here, and then he may be having 1 floor as a complete on rent. Then he himself on his own built 2 floors. Now, whether such building of 2 floors, whether it can be taken as rent or not, whether it can be taken as repairs or not, is an issue over here, because this is not actually an repairs to the building. So all those expenses cannot be like claimed, but those have to be capitalized. So if there are any repairs for buildings, then please check that whether those repairs are just like common repairs, wherein certain painting, plumbing job, or some repairs to the structures have happened placed, or whether such repair job which your client may say repair here because he wants to take it as an expense. So whether such repair job is actually an addition to the building or expenses which are to be capitalized. So need to check that as well. Taxes are very common. Taxes are okay. Land revenue, local taxes, revenue taxes, you can just claim them. Check the receipts. That's all. Going to the second section, repairs and insurance for machinery, plant and furniture. Okay. First point again, should be used for commercial purposes. Now over here also, as we just discussed, if there are any expenses for machinery, and it happens with my clients all the time, I'm telling you. Many times a lot of expenses are claimed. And now, for example, I have a big client in Alibag. They have a huge factory with factory shed, etc. And they have a lot of machinery, poultry machineries and everything. All those poultry machineries, poultry machines requires huge fans to ventilate and all. So last year my client changed all his fans, and then he told me that no, these are just common repairs to the machinery and they need not be capitalized. Over here it is very important for us to check whether we can capitalize it or not, or whether we can expense it out or not. A client will always tell you that no, it has to be an expense because they want to claim expense and reduce their profits. But over here, we as an auditors need to check whether it is an actual expense or it should be capitalized or not. over here, what was happening was that a ventilation system in the poultry farm was one of very important component. And that was actually when I spoke to the factory in charge or the factory manager. He told me that अरे साहब ये फैन लगाने के वजह से ना ये अभी मशीनरी का लाइफ बढ़ गया, something like that, you know. So that was a very clear indicator for me that it is a capital expenses. So because it is actually increasing the life of the other machineries, or it's actually increasing the life. So it can be a case of, it had happened in one of my client also. They had just changed the wirings of the entire machinery. They said, nahi, nahi, saab sirf wire change kiya, and it was quite a huge expense. So all these expenses should be flagged by you. When you are doing audit of any client, you are the people who are actually going to sit and check all the invoices. Your principals are not going to have the time to sit and see all the invoices. So it is very important for you to flag such expenses. How to like identify those expenses? You can always, of course, check the last year's repairs and maintenance. If this year's repairs and maintenance have shot up really high, so you understand maybe there have been a huge expenses. Then all those invoices you need to get out from the client and discuss it with your principal, that whether we need to capitalize it. You need to have a word with the factory manager or what kind of expenses were they. As I said, they said that it was okay. It just said, the invoice just said wiring change or something like that, very decrypt. And they told me, and when I actually spoke with the factory manager, he said, the machine was closed for almost 10-15 days, and their rats had eaten some wiring. So they had to change the entire wires of it. Now, if you change the entire wiring of an entire machine, he said that we changed the wire and we put in some different kind of wire which had which was better than the previous one. So that again increased the life of the machine. So all such expenses cannot be like expensive. You have to capitalize those expenses. So it's very important for you to note these expenses. Okay. Okay. Coming to depreciation. Again, a very important one. All your clients are going to have this as an expense. So what I'm going to try to do today is try to give you an overview of what depreciation is, how it is calculated, what are the rates, etc. I'll be giving an example also. Depreciation is to be charged only on assets which are used for commercial purposes. So again, furniture and fixtures purchased, depreciation is claimed by the accountant. We called in for invoices. He shows the invoices. The name of the invoice was the name of the party, whatever it was. The billing address was their office address. The delivery address was at his home. From there, we got to know that these furnitures are not being used for its official purposes. The client may tell you that नहीं सोफा तो लगता है ना बाहर. Okay, लगता है बाहर हमारे गेस्ट आते हैं, गेस्ट इन द सेंस our clients आते हैं मिलने को, लगता है हम बराबर. But then why is the delivery going to your home? So it's a personal asset. It's not used for profession. Again, call in for invoices. Check all these things. It should be used for profession. What is depreciation? Depreciation is basically a diminution or exhaustion of the value of fixed assets. We all know that fixed assets have been capitalized, so there are some part of every year the fixed assets are getting older and older, so you have to charge some part of it to expense. So depreciation is the way you do it. Income tax is very specific on what kind of asset. Income Tax Act is very specific on what kind of assets you can claim depreciation on. The assets which you can claim depreciation are buildings, machinery, plant and machinery, and furniture and intangible assets, but not goodwill. Okay, not goodwill. There is no depreciation on land, so you have to be very careful about that. And can happen in certain situations wherein a parcel of land and building has been bought in by your client on in the same agreement. So it doesn't happen like that. There is always two separate agreements, but it's always better for you to call in for those agreements and to check, because you can't claim depreciation on land. Important point. Plant over here. What does plant and machinery mean? Again, my poultry client. He says that it was not the contention by the directors. It was by his tax accountant who came telling me that we need to take chicken and hens as plant and machinery. Wow, why? Because they give eggs to us. And so they are our plant and machinery. They are manufacturing eggs to us. So no, it doesn't happen that way. Plant and machinery, there have been only some specific plant and machinery can be included, such as whatever your apparatus and all, motor cars, etc. And livestock, buildings, furniture have specifically been removed from that. So no, you cannot include all the such things. Okay. Depreciation can be claimed only when the asset is put to use, or even in case it is ready for use. I'll tell you what is ready for use separately. First, I'll tell you what is put to use. I'll give you an example for this. We have a big consulting client, and they ordered a lot of computers from HP in bulk. Somewhere around 50-60 computers they ordered in. On the computers, all 50-60 computers came in, and they put in they took everything. It was ordered somewhere around in month of June, and then they claimed the entire depreciation on it. Over here, when we were doing the audit of there, we asked them that you ordered 50 to 60 computers. Whether all those 50 or 60 computers were allocated to your employees on that day itself, or whether they were actually put to use. And basically, whether they were put to use. So when we actually dug deep, it was not a mistake by the client. He also did not know this provision. So when we actually dug deep, we understood that many of the computers, almost 10, 20 computers, 20, 30 computers were allocated to the employees who joined after September or October. So the depreciation relating to those computers, so the computers were not put to use itself. So whenever you're taking, you are auditing any client, and there is an addition to the fixed asset on which depreciation has been claimed, it's very important for you to check the invoice. When was it purchased? When was it delivered to you? It's very important. That is also very important to check, because if it is not delivered to you before 30th of September, but the bill date is before 30th of September, it might happen. Just don't go blindly on the date of invoice. Check whether it is being delivered to you. And get a certificate from them. Many of things that now this consultancy firm had this records with them that the computers were allocated to them on such and such date and this date. So we actually got to know when they were actually put to use. But many of your clients, if they don't have the actual records with it, then they at least check what is the delivery date of that fixed asset. I'll give you another example. One of my client is a manufacturing unit, manufacturing concern. He bought a huge machinery of almost 1.5 crore last year. The date of invoice was somewhere around in April or May. Then we checked the delivery also, it was correct. So we were like, chalo, it is proper, it is done, it can be used, and it is put to use. However, what we did, another step we did was, because of certain conditions pertaining to pollution and everything, they had to take a certificate from Pollution Control Board, which was certified by the engineer, that the equipment they are using is as per the norms, and the equipment they are using has been properly installed, and it can be used as per the norm specified. That certificate had to be taken from the engineer and given to the pollution control board. We asked that certificate for the client, and we got to know that actually the date of invoice was in April. The machine got delivered in May. However, there was so much of work around the machinery which had to be done prior to it can be actually put to use, that it ended somewhere around in November or December. So from there, we got to know that, oh, it is not put to use only till the end. So then we again took half of the depreciation only. Now, why I am telling you after September is, I'll come to that point. Now, okay, I'll just, before I go to the next point, I'll just see what is ready to use. There have been many instances wherein the courts have given a judgment that it is not necessary that the assets need to be put to use. Assets can be ready for use. For example, certain fire equipment, standby equipment, fire extinguishers. All those equipments are ready for use. Now, for example, what is ready for use? You are constructing a building. At a specific point of time, as per the laws, once a certain part of the construction has been over, you need to put in the fire equipment in the entire building as per the laws. And it may be a case that the OC, which is the completion certificate for the building, might have not been received by the builders till that time. So whether it can be said that for those, actually it's the example is a bit vague, because depreciation, whether you can claim, then it has to be used for business. So I'm just trying to make certain, maybe we can think of a mall. Okay, chalo mall. So mall, you have to put in certain fire extinguishers. So all those fire extinguishers and everything has been put into place. But then whether the assessee who is owning the mall can claim depreciation on such equipment or not? The answer to this is yes, because this equipment was ready for use. And ready for use is what you can, the methodology which has come in by litigation and by judgments of the court. So I would not suggest you to take any position in your clients, that the client may tell them, हाँ ये computer आ गया है, it is ready for use, मैं बाद में use करूंगा उसको, या किसी ने use नहीं किया. No, don't take such position, भाई. You always take a guided opinion of your principal that whether we can do that or not. And 99% of the time, the principal will tell you that if it is not put to use, then not to take the depreciation. Okay, going to the next point. Why I have been continuously stressing about September, October is basically because you may be knowing that in Companies Act, depreciation is claimed on a pro rata basis on the number of days from its capitalization. So if it is used for 30 days, then the depreciation into 30 divided by 365, that's what we do in Companies Act. But however, in Income Tax Act, they have given a very clear-cut guidelines. They have said that don't do any such difficult calculations. If the machine is or the fixed asset has not been put to use, basically the asset has been put to use for less than 180 days, then 50% of the depreciation is allowed. That's it. That's a simple thing. If the rate on a fixed asset is, let's say, 10%, and it's put to use in for less than 180 days during the year, then 5% is allowed. That's it. A simple one. Okay. Next one is, okay, now assets need not be even used by the assessee. This is not a condition for claiming depreciation. Assets can be used by other person also. Now, for example, in case of lessee, and if it's not operating, it's a financial lease where the ownership is going to be transferred to the lessee at the end of the lease period. Then check the lease agreement if it is in the kind of hire purchase or if it is a kind of a financial lease agreement. Then make sure that you claim the depreciation, because the ultimate ownership is going to be placed with you, and there is no such condition that an owner, which is the lessor, the legal owner currently, is not using it. Yeah. Okay. There is an additional provision in section 32 which was provided to give impetus to manufacturing industry. Government is promoting a lot of manufacturing, as we know. So in order to give some impetus to them, they have said that in case of business, if it is he is in a business of a manufacture or a production of an article of a thing, they have not specified what article or a thing. So we can presume that it's anything, but if it should be a manufacture or a production, raw material goes in, something different thing comes out, that's a manufacture. Or if it's in the business of generation or transmission or distribution of power, then 20% additional depreciation can be claimed in addition to your normal depreciation, which is at the rate of 15% normally for the normal plant and machinery. In addition to that, you can claim 20% additional depreciation. In case if the asset is put to use for less than 180 days, then of course the normal depreciation you get at the rate of 50%. Additional depreciation also you get at the rate of 50%. That is 10%. This 10%, this additional 50%, this 50% of additional depreciation which was not provided to you in the first year. For example, let's say in financial year 2021, you buy a machinery which is for manufacturing something, and you buy it in January, and of 1 lakh rupees, 20% is allowable to you as additional depreciation. So out of that 20, only 10,000 will be allowable to you in this year. The next 10,000 can be taken by you as additional depreciation in the next year. That's what they are also doing. So they are like, even if it is put to use in less than 180 days, we don't want you to lose your depreciation of this much. We will provide it to you in next year. Okay. In depreciation, there is a concept of block of assets. I should have covered this before, but it's okay. I'll just tell you now. Block of asset means that there are 4 major block of assets which have been provided in income tax. What happens is, when you put the main concept of block of asset, what it says that when you put an article or a thing, means whichever asset you put into that block of assets, it just becomes a part of a big block, and the individuality of an asset is lost. In Companies Act or in that act, when you claim a depreciation, you claim depreciation on each and every fixed assets individually. You may you may say okay, हम add करके डालते हैं सब कुछ, but actually in principle depreciation is claimed on each and every article differently. However, in income tax, block of asset means उसमें डाल दिया, it's part of a big one. It has lost its individuality now. So I have not covered the sale provisions over here. So if there is a sale of asset from that block, so it's not, we never record loss on sale or loss on sale of any asset. You might say the WDV of that asset is just this much currently, and we have just sold this much. No, it doesn't happen that way, because the individuality of the asset has been lost. When you say that there is a sale, you just directly reduce that amount from the block of assets. Rates of depreciation, I have covered some rate of depreciation over here. These are the major ones which are applicable to you. However, under buildings, under plant and machinery, under intangible assets. There are several blocks as well, which may prescribe different rate of depreciation than it is. But commonly for maybe I'll say 90% of the clients, these are the rates which are applicable. But there are some certain industry specific rates, wherein the rate of depreciation can change. So before claiming any depreciation, just refer to the rate of depreciation schedule as well and check whether the depreciation rate which you are claiming is correct or not. Okay. Just for our proper understanding of what we said just now, I have taken an example over here so that we can properly understand what's going on. Mr. X is a proprietor engaged in manufacturing business, and he has provided this information to us. The opening DV is on for plant and machinery is on 1st of April 2021 is 30 lakhs. New plant and machinery was purchased and put to use on 8th of June of 20 lakhs. Another new plant and machinery was acquired and put to use on 8 lakhs on 15th of December, 8 lakhs. Computer was acquired and installed in the office premises, 3 lakhs, and we'll assume that it's put to use as well. How will you calculate the depreciation on it? So let's see what is the normal rate of depreciation. So the first two, that is the 30 lakhs and 20 lakhs. On 30 lakhs, which is the opening WDV, and on the new machinery which has been used for more than 180 days, the entire depreciation will be 100% depreciation will be allowed to you. So that's the 50 lakhs out of it. 50 lakhs of 15%, 15% on 50 lakhs, which is 7 lakh 50. The machinery which has been put to use after 180 days of 8 lakhs, you get half of that. So that's 60,000. And on computers, you get a rate of depreciation of 40%. Okay, and plant and machinery, it's not just 15%. As I said, there are other rate of depreciation. Plant and machinery, computers are given 40% rate of depreciation. I missed to write it out over here, but on computers it's 40%, and on other plant and machinery it's 15%. So on a computer, it's 1 minute. Yeah. On a computer, it's 50% since it was put to use in less than 180 days. So over here as a computer, you get 20%. Now, additional depreciation. Additional depreciation for this piece of machinery. We are assuming that all the machineries are for manufacturing. So on this piece of machinery, 20 lakhs, you get 20%, the entire. However, on the next piece of machinery, which was purchased in December, 8 lakhs one, you get 10% over here, because which is 50%. Now, 80,000. 80,000 instead of 1 lakh 60, 80,000 was allowed to him. Now, in the next year, the remaining 80,000 will be allowed to them again. That's what the provision says. So they are not trying to take away the provision, take away the benefit from you just because you have used it less than. They say take it the next year. So I hope it is clear. If you have any queries, then you can let me know. So this is what I had covered in depreciation. Basically, I have just covered the basics of depreciation. Over here, again, 2-3 points I would like to mention to you is, of course, the date of use. Very important for you to note. Secondly, again, important for you to note and check when you are doing the audit is the opening WDV figures. I'll tell you why. What happens is, many times in books of accounts of companies, books of accounts of companies, the rate of depreciation has been taken as per the company's rate. And the closing values, the closing WDVs, as per the books of accounts, is very different than what are your closing values as per your income tax calculation, because the rates are different. I have seen in my cases wherein the accountants have taken the closing WDV of the books as the opening WDV as per income tax in the next year. So, and they have calculated the depreciation and everything. So, when I was doing checking between the last year and current year, there was a huge difference between depreciation. I like how is the depreciation so different when there are no major additions to it. So then when I started digging deep, then I understood that this was the major mistake that had happened. So again, as interns, as students who are on ground, who are doing the actual audit, I'm quite sure that in your audit program, all these points will be mentioned, but for whom which are not mentioned, then please remember to check the opening WDVs also when you're calculating, or if you have got any sheet in which the depreciation has already been calculated, or you have to calculate the depreciation for the client, then check the opening WDVs also. Check previous year's computation of income. Check their closing WDV. Check whether the closing WDVs and this year's opening WDVs are matching. Important point. We have discussed about date of use. So 180 days, 180 days, 180 days, more than 180 days and less than 180 days. We have covered that point. Deductions also somewhat we have covered. So these are the very important points on practical basis you need to check when you are checking depreciation or you're calculating depreciation. Okay. Other important deductions over here. Insurance premium and stock and stores, very common. It's there on everywhere. Check the premium receipt and do it and claim the expense. Premium paid
Sir,
by the...
Sorry to interrupt in between.
Yes.
But the students are requesting to please use the slideshow option, because I think the screen is not clearly visible to the students.
Is this okay?
The size is a bit small, sir, actually.
Size is small?
A bit small, yes, sir.
I'm not able, I don't know, means it's a full screen over here right now.
Sir, just...
PPT is in split screen mode.
How is 1 minute? Huh? I'll just stop sharing my screen. How is this now?
Now can you make it as a slideshow? Yes.
Play from current slide. Is this okay?
Yeah, perfect.
Okay?
Perfect,
sir.
Okay.
Thank you, sir.
Thank you.
Thank you.
Okay. Sorry. So we were on premium paid by the employer for the health insurance of the employees. And this provision was introduced long time back, but this was mainly introduced for providing benefits to the employees, so that the employees do take health insurances on premium paid. Bonus and commission not payable as dividends or profit. This is an important provision which you need to check. In this, what you need to check basically are 2 points. If any bonuses is paid to employees, then check whether are they holding any shares in that company. What do you mean by not payable as dividends or profit? What it means is basically after the P&L has been finalized in company accounts normally, what happens is P&L has been finalized. There is a profit, you pay tax on it, and post tax, that is profit after tax. On that, you need on that dividends are issued to the shareholders. It might happen that the companies say that instead of issuing dividends to us, issue bonus to us. And those employees are directors having majority stake. So basically what happens over here, what is happening is this bonus which is paid to the director, who is an employee of the company, is being paid not as a bonus per se, but that bonus or commission or whatever by name you might say, that it is paid as a profit to the director, as a part of profit. So then if it is paid as a part of profit, then it is disallowed. It is not allowed. However, for genuine bonuses, Diwali bonuses provided to the employees and everything, those are all okay. And those are allowable. So all the bonuses and commission are allowable. And under section 36(1)(2). So all those genuine bonuses or commissions are allowable to you. So in case if you get to see such bonuses or commission, try to get into deep into that. Try to see what are the ledger accounts, whom it has been paid to. If it is not been paid to the directors, then see, very important for you to note the provisions of section 43B also. I'll just, before going to section 43B, I'll just briefly touch upon what is 43B. 43B is a section, as I said, in the whole arrangement of section, this 43B comes in the other part. 43B is a section which says that certain expenses which have been listed down in 43B are to be allowed to the assessee as an expense only in case if they are actually paid during the previous year. The expenses can be paid. I'll just repeat. The expenses are allowed only in case they are actually paid. That's what section 43B says. These expenses can be paid during the year, or these expenses can be paid until the due date of filing of your income tax return. If they are paid by then also you can allow these expenses. Now this bonus and commission is this is a important part of this expense. And this thing, I'm quite sure that the students who are listening to this and who have tax audit experience, there is a clause in 43B in tax audit also, wherein you need to mention all the expenses which have been which are payable in the current year but not paid till the time of till the due date of filing of the income tax return, or which have been paid, or the previous year's expenses which are not paid are paid now, something like that. So in case it happens that okay, chalo, bonus and commission is paid to someone, is payable. Let's say a very typical example in assessees, and this has happened for many of my clients current year, especially 31st March, there is a bonus payable provision in the books of accounts. Bonus payable provision for the employees, nothing related to payable of dividends, a very genuine thing, authentic. So this bonus payable to employees, and this bonus has been taken as a provision in your books of account as payable. Now, I can allow this expense only if it has been actually paid. Now, this bonus will be paid at the time of Diwali, which is not yet come. But for all the business clients to whom we had filed a returns on 31st of July, we had to disallow this provision. So make sure that if you get to see this expense, check 43B provisions as well. Hope the provisions of 43B are also somewhat clear to you, that expenses need to be paid, actually paid, just a payable entry cannot suffice, and it has to be paid before the due date of filing. Then only it will be allowed in the previous year. Now for all the assessees to whom if it is not allowed in the previous year, then it will be allowed in the current year in which the expenses are actually paid. So it's not a permanent disallowance, but it's just like shifting of expenses from this year to next year. Again, interest on borrowed capital for the purposes of business and profession. Important one. Many of your businesses or your assessees are doing businesses with loans, and many of them take term loans. So it's a very common mistake which I have seen in my accounts is that in our ledger account of loan, there might be a monthly EMI which has to be paid. In that monthly EMI, there is an embedded component of interest also on it. So for example, there is a loan of, let's say, 1 lakh rupees, and you have a monthly EMI of 5,000 rupees. So in that ledger account of loan, you will see 1 lakh loan taken 5,000, 5,000, 5,000, 5,000, 5,000, 5,000. However, in that EMI, you need to understand there is an embedded component of interest as well. So you need to ask your client to share with you the interest statement or the interest certificate during the year to actually bifurcate this 5,000 into what is the principal component of it and it is the interest component of it. And it's like every year we see these mistakes. Every year means the interest is put wrong, or sometimes it might happen that the entries have not been bifurcated into principal and interest components. So there are mistakes. There might be a case where client is prepaying the loan. In this, let's say 5,000, 5,000, 5,000, 5,000, 5,000, 5,000, and in between there is a huge repayment of 20,000. So then the whole interest calculation may also change again. So it is important for us, if there is some payment which is other than the normal EMI payment, then at least get an interest certificate from the assessee for that year. And again, over here, interest on borrowed capital for certain, if the loan has been taken from certain institutions such as NBFCs, systematically important deposit taking, non-deposit taking NBFCs, cooperatives, etc. All those people, if you have taken some loan from them, it is important for you to check provisions of 43B, which means interest on these loans will be allowed only in case they have been paid. So check it. Normally in 90% of the cases, the interest will be paid before the due date, but just check this. Okay, now the next one. Very important for you, 3615A. And I would say one of the most litigated issues and issues on which we have faced a lot of friction between the clients, because it kind of goes into a territory of being thoda sa unfair to the assessee, but still it's a provision, so we have to understand what it is. Now what it says is, in our salary component, provident fund, superannuation, there are two components in this. There is an employee component of it, wherein the employee from his salary does it, and assessee puts some, his contribution also is put in, which is known as employer contribution. So if my salary is, let's say 50,000, 5 lakh rupees, let's not assume so low, 5 lakh. Out of that, let's say 50,000 I am putting it into provident fund. Then as per whatever the rules of provident fund, employer needs to also put in 50,000. So that 1 lakh goes into my provident fund. Now in this 50,000 which the employer is putting in, he will of course take it as an expense, as a salary expense. He would say कि ठीक है, employee को ही जा रहा है, it's a salary expense. However, what this section 3615A says is that the amount received by an assessee employer contribution from the employees towards the welfare fund will be allowed only if the amount is credited on or before the due date. Now, this due date, there was a lot of litigation in the past that said that this due date no one has said what this due date is. So we are taking the due date as per income tax due date. But now an explanation 1 and explanation 2 have been inserted from the finance from AY 21-22. And it's a very clear provision from now that in case the due dates over here means that the due dates which are specified in those acts only. So what does Provident Fund Act say? So if, for example, Provident Fund Act says that the employer's contribution needs to be deposited within 15th of the next month, and by mistake you did it on 16th, then still, because of just 1 day lag, it's a completely genuine expense, still the expenses will be disallowed. Very unfair provision, but it's there. So I'm 100% sure for almost all of your business clients who have a sizable business would be having Provident Fund, ESIC, superannuation, and also all these things you need to check whether the employees' contributions have been deposited in time or not. Make a chart. For my interns over here, we have given a format to them that for all such expenses, they have to prepare a chart. What was the due date for this month? What is the due date? When was it actually paid? How much is actually paid? If it is not paid in time, what is the disallowance amount? So make a chart like this. Like Provident Fund amount, what is the date, what is the month date to which it is relating to, what is the due date, what is the amount, what is the amount paid. Now sometimes it happens that, and these are very genuine cases, there is some one of my client has to pay somewhere around 1.5 to 2 lakh of Provident Fund. And on the last 15th day or something, there was some problem with the site, and they have some limit of like, I think 50,000 authority has been given to the accountant. So he was making 2-3 payments. So the first 2 payments went through, and the last 50,000 didn't go through. So they paid that 50,000 next day. That 50,000 was disallowed. So make sure that if there is such cases also, that if out of 1,50,000, 1 lakh has been paid within due date, allow that. 50,000 paid next day, disallowed. Okay. So again, important, very important for all of you to check these provisions. Okay. So these are mainly there are many other deductions as well, but those deductions we normally not see in our assessees. So I have covered this major allowances. Okay. Now residuary expenses. Of all the expenses that we have seen currently till now, only some part of it have specific provisions to it. Let's say interest on a loan. We have a very specific 36(1)(3). Under that, it will be allowed to us. Rent, section 30, allowed to us. Repairs on machinery, plant, section 31. Depreciation, 32. Very specific provisions are there for certain specific expenses. These are there. Now, when we are working on a practical scenario, it is highly impractical for the department to come up with provisions of for specific expenses for all the expenses for all the assessees. Because the businesses are changing almost every day. The nature of businesses are changing. The way of doing the business are changing. The nature of expenses are also changing. So it is very difficult for them to categorize these expenses as a specific expense. And the Income Tax Act will never end. So what they have said that all the expenses which do not have an specific expenses, put it into residuary expenses. Now this residuary expenses, if you want to claim it under section 37, you need to check whether all these conditions have been satisfied by them or not. What are these conditions? These conditions prescribe that, of course, the first one is it should not be under section 30 to 36. So if they are specifically covered within 30 to 36, go there. Don't go here. Don't come here. It should be incurred by the assessee in the accounting year based on your method of accounting. If you are on accrual basis, on cash basis, it should be incurred during that year. It should be in respect of the business carried on by the SEC. Very important. The most important condition is that this residuary expenses should be for the purposes of carrying on the business and profession or vocation. You cannot put in any ABC expenses or XYZ expenses, which can be termed as your personal expenses. Means there have been case laws. Why it is so important for me? Because there have been case laws in back wherein people having heart surgeries have put in expenses as the heart surgery expenses as residuary expenses, and they have tried to argue in the courts saying that my heart surgery is very important to my business, because if I die, then the business will also not. So it is very important. No, it's the expenses should be directly for the business. If that logic would have been considered, then all the expenses would have come in. I need food, so that's why I have to come. I need to wear clothes. So the expenses should be directly related to the business or profession. It should not be of personal expenses, as I said. It should have been laid out, expended wholly and exclusively for the purposes of business. Again, this point says the same thing. It should be wholly and exclusively for the business, directly in concern to the business, not in the nature of capital expenditure. We have discussed that also. It should not be prohibited by the law. Again, very important one. You might say that मैंने एक किसी को ब्राइब दिया काम करवा के लेने के लिए, लाइसेंस लेने के लिए. It is for my business. हाँ, मुझे लैंड चाहिए to make big manufacturing factory, but it's a bribe. It's a illegal expense. You cannot claim such expenses which are illegal. You might say that no, it is only for the purposes of the business, expended wholly and exclusively for the purposes of business, but still no, it cannot, because it's illegal. It's an offense. So all these conditions, if you are satisfying all these conditions, then whatever the expenses may be, even if they are not under the specific, you can go under section 37. This is what it says. Now, there are some explanations to it. The first explanation says that a declare expenditure for the purpose. Okay. It also says the same thing, that any expenditure incurred by an assessee for any purpose which is an offense or which is prohibited by the law shall not be deemed to have been incurred for the purposes of business or profession, and no deduction or allowance will be made in respect to that. So basically it says the same thing which we discussed right now. Even if it is for business and profession, but if it is against any law, any law in India, or if it is an offense, then it should not be claimed. It would be deemed that it is not an expense for business and profession. Now, this explanation 3, I would say a hugely litigated issue again. Very important amendment. Maybe in next year's exam, it's very important for you to understand this amendment and to note this amendment, because it's very important in the current scenario. I'll just give you a brief background of why this explanation 3 came into this. What was happening was medical companies were supposedly giving certain benefits or certain gifts to the doctors, and it was it was assumed that based on such gifts or benefits, travel benefits, trips and everything, the doctors were prescribing medicines of that pharmaceutical companies. So this practice is bad in law, and as per the IMA guidelines, Indian Medical Association guidelines, a doctor cannot take such benefits, such perquisites or such gifts from any pharmaceutical companies and prescribe their medications. So it's an unfair practice, very bad. It's bad, wrong. So all these medical pharmaceutical companies were giving such gifts and everything and were claiming as expense. Assessing officers started disallowing these expenses. They said that no, it is against the law for you to give. Pharmaceutical companies, being huge pharmaceutical companies, having good representation, they represented that the IMA guideline says that a doctor is banned to take them gifts. However, a medicinal pharmaceutical company should not be held liable and should not be held liable with the purview of Income Tax Act. They are saying that just for the limited purview of the Income Tax Act, you cannot tell it that it is an offense by a medical pharmaceutical company to give gifts, because the IMA guideline says that a doctor should not take. So we can give something like that. And this was actually accepted by many courts. And then after this, there was a High Court judgment, Supreme Court judgment. Then there are favorable and unfavorable judgments as well. So just to keep everything to place, just to put all these things to place, they have put in this explanation. And there have been many case laws wherein such expenses and everything has been done with relating to case laws, with relating to laws which are outside of India as well. And some of them can be argued as not fair to the assessee or something, but I'm not going to that. I'll just explain you what the provision says. What the provision says is that now it is clarified that the expenditure incurred by an assessee for any purpose which is an offense or which is prohibited by the law shall include, and this is important, shall deem to have always included the expenditure incurred by an assessee. So almost they have done like a retrospective amendment. There has been a lot of talk. This point we had discussed this point in some other lecture wherein I was giving a lecture to chartered accountants. On this point only, just these 3-4 lines we were discussing for 1 hour. So it has so many implications under this, whether it is retrospective or not. So I'm not going to that. So they are saying that it is deemed that it's always there. Any purpose, any law prohibited by any law, time in force in India or outside India as well. So they are saying that if there is a law outside India and you're breaking that law by doing certain expenditure, that is also that is also an offense, and that also cannot be taken in an expenditure. Now outside India there are many laws. How can we? It's impractical for us, but still. This second point was mainly for the medical and pharmaceutical case law which I discussed. It said that to provide a benefit perquisite in whatever form to a person, whether or not carrying a business or exercising a profession, and acceptance of such benefit or perquisite by such person is in violation of any law, rule, regulation, or even a guidelines, as the case may be, from the time being in force, governing the conduct of such person. So they are saying that you giving, it's not an they taking and is a crime, but you giving is not. Don't do like that. Don't take that argument. We are saying that even if it's acceptance or anything, we are covering everything now. I just want to put it to rest. So they said that everything has been put to rest. These are offense. You cannot take this. And they have included one more, to compound an offense under any law at the time being in force in India or outside India. Compounding fees. Now there are a lot of things in that also, whether compounding fees should be accepted and many things. But over here we can say that if you are compounding an offense, what's an offense is a different ballgame again. But if you are compounding an offense, you know you have broken the law in order to not been punished, not been prosecuted. You are paying certain fees to them. Then those compounding fees or anything which you are paying cannot be allowed in an expenditure. is what basically it says. On a practical situation now, how would you as an auditor know that this benefit was actually given? Because it's very difficult, right, for you to understand that certain benefit has been given to certain doctor or anyone else. So this was a very practical situation before, in which we as auditors also would be very difficult for us to understand, because audit of pharmaceutical companies is like a ocean. We won't be able to go through each and every single paper document. अच्छा कौन travel कर रहा है, कौन ये कर रहा है. We can't go to, not humanly possible. So as a way forward, what the department has thought is they have introduced section 194R, which is a TDS section. In that TDS section, what they said that you need to deduct TDS on such benefit or perquisite which you are giving to any person. Now, this benefit or provision, we won't be saying that this benefit or provision, you might say, abhi you said ki this provision expenses should be disallowed, because there this should be benefits and everything should be disallowed as per this explanation. Then why are they taking out a TDS section on that? But you need to understand that this benefits or perquisites or whatever they are giving, benefits and perquisites, are the benefits and perquisites are prohibited by the law. There might be very genuine benefits and perquisites. Now, for example, not a pharmaceutical company, let's take another company. Many times some company or commission agents do a lot of business. Then we give us some benefits. Now, for example, if you do a business of $1 million a year, then you will be given a Switzerland trip for you and your entire family. That's a benefit. Over there, you can understand, okay, such benefits, such perquisites are there. Over there, the companies are mandated to do TDS. And then you can check. Then out of such benefits and perquisites, maybe you can just by your natural application of your common sense or by other law, if you get to know, okay, this is not as per the law, then you can get in your principal's attention to it, saying that, okay, we have found out such thing, and maybe as per our opinion, it is not as per the law. Okay. Okay. So now I have covered over here expenses. I have covered major expenses. I have covered what are the incomes that can come, how the incomes comes. Now you must be thinking, "Arey yaar, itna jhamela hai." And at least we are consultants. You are future chartered accountants. If we are only thinking that it is so complicated, just think the plight of a assessee, and think even a plight of a doctor or an engineer who has no clue. A small time people, small time doctors who will say कि अरे एक छोटा expense claim, एक छोटा expense करने के लिए section 36 देखो, नहीं section 37 देखो, ये देखो, वो देखो, 43B देखो, 40A देखो, बहुत झमेला है. So what government did was they said that ठीक है, for certain small scale people, what we will do is we will bring out presumptive taxation scheme. Presumptive taxation scheme, 1 minute. It's almost 12 now. I'll go fast. We have to complete it by 12:30, correct? So that we can get some question answers for.
Aditya, we have all the time. You can take as much time as possible for the benefits of student. Okay, it is all up to you, sir.
Okay. Thank you so much.
Thank you. I'll just log in again. I'm finding some difficulty with camera. I'll just log in again. Okay, you please continue. Right.
Okay. Thank you. Thank you so much. Thank you. Okay. So as I was saying that since there is so much of problem for the assessees, it would be, of course, it means every other day if you go to your assessee telling that no, you do this expense, but us pe TDS nahi kiya hai, to isliye I can't allow it. You do this expense, but no, this expense has to be paid actually. Then I can't. So it becomes a lot of nuisance for small time payers. So it was, the government was also like, yeah, okay, we understand. What you can do is that we will bring out a presumptive taxation scheme. Now, under this presumptive taxation scheme, what mota moti the government is trying to say is that, let's do one thing. If you are a business person, the clause starts with notwithstanding anything contained in section 28 to section 43 CA, which means that it starts with a non-obstain clause. The non-obstain clause means that no one is going to see what is there in section 28 to section 43 CA, and directly means no expenses, nothing. Directly on the total sales amount, we will deal some percentage as a profit, as your income. Okay for you? Means it's like, don't look after any of the expenses, whether it can be claimed, not claimed, this, that, whatever. Just don't see all those things. Just see whether all these conditions are satisfied by you to come into these schemes. If they are satisfied, then just take that percentage, show it as an income, you're done, your work is done. Quite simple. Means it's a very good scheme. So let's look into it in detail. What I have done over here, I have discussed three major presumptive taxation schemes. First one is 44AD, which is for business. 44ADA, which is for professions. And section 44AE, which is for the people who are in business of hiring and leasing of good carriages. Means they have big trucks, they give it on lease. So let's first see what is 44AD and ADA. 44AE, it's very simple. It says that, and I will just first discuss this and get it out. 44AE, it says that if I am an owner of not more than 10 carriages, good carriages, then for me, how would I state my income? I have just 10 carriages. If it's an heavy goods vehicle, heavy goods vehicle means if it is the carrying weight of that vehicle is more than 12,000 kilos, the 12 tons, then it's a heavy good vehicle. Then it says that 1,000 per ton of gross vehicle or unleaded weight, as the case may be, for every month or a part of the month. That much, just deem it as your income. Let's not go into expenses. For any other vehicle, 7,500 per month for the whole vehicle as such. So if, for example, if you have this other vehicle, if you have two vehicles in the month of July. So these two vehicles for the month of July, for these two vehicles, we will deem your income to be 15,000 for those two vehicles. In the month of August, let's say you buy one more, you have three. So 22,500 will be your income for that month. September again you count, and then for the whole year you will count it like that, and whatever be your income, that will be your income, and it's over. So that's the 43AE. Very simple, nothing much in that. So we will come majorly to section 44AD now. 44AD is applicable for businesses. Now you would ask, okay, now an assessee can be an individual, it can be an HUF, it can be a partnership firm, it can be an LLP, it can be a partnership, it can be a private limited company, it can be a one-person company, it can be a trust, it can be a AOI, it can be a BOI, so many things. So it says no, nothing doing, only for resident individuals, HUF or partnership firms. Three people: resident, individuals, HUF, and partnership firms. Only these three, and they should be resident only in India, because Indians को ही मतलब residents को ही देना है, not Indians. Residents को देना है, non-residents को नहीं देना है. Non-residents को कितना भी छोटा हुआ है, सब books of account बना के लेके आइए please. So we want to give it to residents. Partnership firm also, LLPs are excluded because it becomes an incorporated entity, and there are many provisions which the LLP and private limited needs to do otherwise also. So they said not for LLP, but for partnership, HUF and individuals, we are going to give this. Once you take this, you cannot claim Chapter 10 AA or Chapter 6A deductions. And this is not even for people carrying on commission or agency businesses. If you are doing any agency business or commission business, for you, 44AD cannot be applied. What is the turnover criteria? So it says that for going into this scheme, your turnover should be less than 2 crore rupees. Very simple. Presumptive income. Presumptive income, it says now what will be the actual income. Now, as we discussed for 44AE, 1000 per ton of gross vehicle weight. For us, what? They say that it will be 8% of your total turnover or higher, some higher. First, we will just see what this is. 8% of the total turnover. What does it mean? 8% of total turnover, for example, your turnover is 1 CR. So your profit will be deemed, or I would say the deemed is a wrong word, presumed to be 8%. 8 lakh rupees. That's it. You are a businessman doing a tailoring business. You get receipts from cash, from check, from this, that, etc. आपने पूरा टोटल किया साल का, you understand 1 crore हो गया है. Abhi, I don't want to go into how much I give to my employees, how much I give to others, how much I buy clothes, nothing doing. Your income is presumed to 8%. That is what this presumptive scheme is. 8% of 1 crore. Now you may say that, can we just take 8%? Or can we, let's say, I want to show 12%? Yes, you can do that. You can do 12%, you can do 10% as well. Because what happens is, I will not get into the litigation part of it, but there are many litigations surrounding this 44AD and 44ADA. And a certain leeway has been given to the assessee. Now, for example, your tailor. Everyone knows कि मोटा मोटा मुझे ना 12-15% होता है, something like that, you know. So if he feels कि नहीं मेरा ज़्यादा profit हो रहा है, let's show more, let's not show less. Even if you don't know what is correct one, because you have not maintained the books of accounts, you don't know what's there, what are the expenses, because not you maintain books of accounts. So as per the presumptive scheme, you show 8%. But if you want to show 12% also, then also you can show that 12%. So that's why it says 8% of total turnover or some higher than the afford system. Okay. Now, out of that total gross receipts, 1 crore, we know that 50 lakhs has been received to us in our bank account by way of an account pay checks or by way of some other online modes, such as by way of ECS, NEFT, RTGS, UPI, etc. If they have been received, then in spite of taking 8, you can even take 6%. So let's take an example again of our tailor. 40 lakhs has been received in cash and 60 lakhs has been received in check. Then of that 60 lakhs into 6%, 360, and the remaining 8 lakhs, the remaining 40 lakhs, 8%, 3 lakh 20, and you can show an income of 3 lakh 60 or 3 lakh 80, whatever. That also you can show. So 6%, if now, for example, assessee is 100% in bank, he doesn't have any cash. All the checks received by him are account pay checks. All the money has been received always in ECS. 6% is also allowed to them. Yeah, so they are saying that 6% of these receipts, then you need to check these receipts, that this receipt should have come to you or in your bank account during the previous year or before the due date of filing your return of India under section 139(1). So basically it's saying that if you are claiming the 6%, then don't show it as outstanding. It should have come to your bank balance. At least by the time you file your return, you should have come to your bank account. Then you claim the 6%, concessional 6%, or else you just go with the 8% if it has not been received. Okay. Audit requirements in 44 AD, we'll discuss it separately. Advanced tax obligations. Now, many of you must have done a lot of advanced tax calculations also in your articleship days. As you know that when you calculate, now just think of it practically. A person who will say, you know that advance tax has to be paid on quarterly basis, on 15th of June, 15th of September, 15th December, 15th March. On 15th of June, I have decided in my mind this year 2 crore से ज़्यादा नहीं होने वाला turnover. I am going to show my profit as per presumptive rate. As on 15th of June, it is very difficult for me to understand 5th March तक कितना होने वाला. So a leeway has been provided over here also in advance tax. They say कि okay, if you are eligible assessee, then you pay the advance tax on 15th of March. मतलब full advance tax एक बार भर दो. Okay, for 44 AE, he has to pay it in installment because he knows month to month we are calculating in AE, so we know month to month kitna ho raha hai. So that's why they are like, for 44 AE, pay it in 4 installments. But for 44 AD and ADA, both of them have been given a leeway कि तुम लोग direct 15 March को ही भर दो advance tax. Okay. If you have any queries in this, write it down. We can discuss it at the end. Now let's come to 44 ADA. Now businesses के लिए they say कि 8% करो. But now let's take professions. By a common parlance also, we know that as professionals, our profit percentage is way higher than a business person. The businessman can earn 8 to 12%, wherein we can, as a professionals, can earn easily between 50 to 60%. So, because our majority is not, our income is not majorly about buying goods, selling, no something. It's about knowledge base. So our profit margins are high. So what they are saying is that, again, what they are saying is that over here, turnover criteria should be less than 50 lakhs. If you are a person whose turnover is less than 50 lakh rupees, then only you can claim this 44 ADA and claim 50% of your gross receipts as your profit, not 8 or 6, because you are a professional, you earn lot higher. So we know that. So if you want to come under this scheme, pay 50% of your total percent. And again, if you want to come into this scheme, your turnover should be less than 50 lakhs. If it is more than 50 lakhs, maintain books of accounts, do its audit, complete everything, and सब कुछ देखना पड़ेगा फिर 36, 40, 43B, everything has to be seen. No way. But if you are less than 50, then still you can take this advantage. To whom is it applicable? Again, to a resident individual HUF partnership firm, not an LLP. Over here, as we discussed in business, they had 44 AD is it's more of an inclusive it's more of an exclusive definition, not an inclusive. It's an exclusive definition. It says that not definition per se, but it's more of the section is more of an exclusive kind of thing, where it says that persons not carrying out business of commission or agency business, or persons which are engaged in professions specified under 44A, those cannot go for 44AD. However, 44ADA is very clear. And it says that only the people who are engaged in professions which are specified under section 44AA. There are some professions which I have given down over here: legal, medical, engineering, architecture professional, profession of accountancy, basically us, technical consultancy, interior decorations, or any other notified professionals such as a film artist, company secretary, profession of information technology, etc. All this, there is a definition. It's properly given in Rule 6. You can maybe refer to that separately. a main discussion point is not that, but we need to understand 44 ADA, this provision is not for all the professionals. Now you may say that there is some other professional only, which is not included in this definition, and his income is only to the extent of 25 lakhs total gross. Then can he go under 44 ADA? No, he cannot. So that's why this is very important for us to understand that only this profession can be covered under 44 ADA. Okay. So this is presumptive taxation. What I have done over here is, after you have understood this, where do we disclose this in schedule in ITR, in your income tax return? I know your income tax return thing has been covered in depth, but just because I was on the topic, I wanted to show you where it's shown. Presumptive income is again taxed under PGBP, head PGBP only. So the ITR applicable would be ITR 3 or ITR 4. ITR 4 is basically a very simplified version for people who are doing presumptive taxation. And there are many conditions which are there. Only then you can go for that form, ITR 4. Means if you have some presumptive income, your income is less than 50 lakh rupees, and you have some other sources income only, which are again defined in term interest from saving bank, etc. If only those limited incomes are available, are there with you, only then you can go for ITR 3, ITR 4, I'm sorry, or else you go back to ITR 3, wherein everything is there. So under ITR 3, under the schedule, business and profession, you have to disclose it over here. Section 44 AD, you have to disclose it here. How much profits have been deemed. Since this is when you disclose your income under section 44 AD or ADA, it's a presumptive taxation scheme, which means that you have not maintained your books of accounts. So in this form of profit and loss, you don't need to, under profit and loss, you don't need to give sales. Then these are my expenses like conveyance, salary, blah, blah, blah. You don't need to give so much. So under profit and loss in ITR 3, you have to give, and these are the disclosures you need to give. Computation of presumptive income, nature of income, business code, description. Over here you see, it says gross turnover or gross receipts. You mention it over here. Now, they are saying over here to bifurcate the amounts which can come into 6% and which come into 8%. So basically, which have already come to your bank account by way of account pay check or account pay draft, or by electronic clearing system received, or by other prescribed electronic modes. So they want to understand that what is the total turnover which is eligible for 6%. So if there is some, if the out of that 1 crore, as per in our Taylor example, 60 lakhs was banked, then you show 60 lakhs here. And any other mode, 40 lakhs, you show it over here. So when you show it over here, most probably there would be a automatic calculation over here which says that presumptive income under section 44 AD, 6% or the amount claimed to be earned. So I don't think so. It's I correct myself. There should not be an automatic transfer. If you are claiming 6%, then claim 6% of this over here, this of here. And for any other mode, you claim 8% or more. For example, you make a mistake. Like over here, you show 60%, 60 lakhs. And for any other mode, you calculate 6% over here instead of 8% or more. Then you will get a notice, a defective return notice. Section 139(9) notice you will be receiving, or you will be receiving a notice under section 143(1) saying that this is a mistake. So make sure that you, why am I showing this to you? Because there are many disclosures. So make sure that if you're showing it under 6%, then show it under this proper place, you know. Over here also 44 ADA. ADA is very simple, 50%. There is no 8%, 6%, no 2, 3 things. So you need to give them 1 minute. You need to give them what is the nature of income, business code, description, gross receipts, and then 50% will be claimed here. Now, over here again, we have got this notices in past. So over here, nature of business, when you put this nature of business, very important for you, because it's a bit in the assessees or in your client, some friend tells him, अरे मैंने ना ये सब कुछ रखा नहीं, मैंने 50% डायरेक्टली क्लेम कर दिया, तो भी तो प्रोफेशनल ही है ना, तो प्रोफेशनल के लिए 50% हो जाता है. Now they are not aware of this technical knowledge that only a specified business, which is a profession, is covered under 44 ADA. So it may happen that nature of business over here, you put some other business only, which is not covered under 44 ADA. And you can put some completely different code. It may be a profession. But since it cannot be covered under 44 ADA, the ITR will not throw you this error. But you will get a notice under section 143(1) saying that the business which you are claiming 44 ADA under is not eligible for 44 ADA. So going forward, if any of your clients are going with 44 ADA, make sure that this is a business which is covered under 44 ADA, because you have to give us proper business description. You have to name the business, you have to give a business code, you have to give a description. So you are basically giving the information to the income tax department, and they are going to have some internal checks in which they are going to check whether you are claiming this 44 ADA correctly or not. So make sure that you are doing it correctly. Okay. Yes, again, and this again you check in 44 AD also. Don't put the nature of business as commission or agency business, and put this business code over here, and then put the receipt. Then again it will be disallowed, because again there are some specific exclusions in that as well. Okay. Okay. Now this is the this is ITR 4 Sugam. Over here the disclosure is something like that, very similar. See, the nature of business code is again there. They are going to, in both ITR 3 or ITR 4, they are going to check your business. Over here again, they are going to see the bifurcation between account pay and other mode. Then they will again see your calculation. So if you put it in the other mode and take it less than 8%, again you will be receiving a notice 100%. Over here 44 ADA also, they are asking for nature of business and everything. So they are asking for this also. So these are the major things which, in case you're doing any return for 44 AD and ADA, you need to keep it in your mind. Now I'll come to one of the most important aspects of our presentation today, audit applicability. Okay, so why am I saying important is because of the penalty that your client may get in case we miss that an audit was applicable to the client and we did not do his audit. Then the client might get penalized for that. The penalty is quite high, 0.5% or 1.5 lakhs. So it's very important for us, and it's our responsibility to at least tell the client that, see, you are applicable for audit. Before that, we need to know who are applicable, who are not applicable. So we need to be very clear on what is the applicability of audit and what is not. Okay. Client will always be very resistant to audit, but then we need to make him explain that audit hai to hai, aisa hai. Okay. So very important. Let's go through this. Audit applicability, tax audit under section 44 AB. Every person is covered over here. It's not like AD or ADA, wherein only individual residents or HUF. Every person, trust, BOI, everyone is there. So, but who are covered into tax audit? Tax audit people are only people who are having income in business and profession. Only then they will be covered. I am a salaried person. I am having 50 crores as my salary. Whether tax audit is applicable to me? No, because I am a salaried person. My income is coming from salary. I am a huge builder, just owning lots of land, having not a builder, per se just an investor having lots of residential flats on rent. I get 10 crores every year from that as rent. Tax audit is applicable for me? No. Only in case you have PGBP income and only in case your turnover exceeds a specific criteria, then only tax audit is applicable to you. Okay. So for whom is the tax audit applicable? Now it's going to get a bit tricky over here, because what I will do is, first, it's going to get tricky for business. Profession is quite simple. In business, firstly, you need to see what it's a turnover criteria for applicability of tax audit, and there is another criteria which will come. So the first thing you need to check is whether the total sales, turnover, or gross receipts is more than 1 CR. If it is more than 1 CR, then you are applicable to tax audit. However, in a small, not a small, quite a big, I would say, and what I would say, motivation is given to the assessee to not to do any cash transaction. Is basically, in case your turnover is more than 1 crore, then tax audit is applicable to you. However, if your aggregate receipts and your aggregate payments from account pay check or your bank draft receipts or by online mode is less than 5% in the whole year. So basically your aggregate cash payments in the whole year are less than 5% of your total payments, or your aggregate receipts for the whole year, which and everything, all the receipts are less than 5%, and they would include cash receipts and even non-account pay checks. They are saying that non-account pay checks, if there is no account pay on the check, then also it is deemed to be a cash receipt. So all these things are less than 5%. Then your tax audit limit goes from 1 crore to directly 10 crores. So it's quite a boost given to the assessee, saying that don't do any cash transaction, only do bank transaction, because if you do more than just 5%, then it's 1 crore. At 1 crore, you will be applicable for tax audit. If not, then 10 crores. This is the first condition we need to remember. Let's come to the, this is the first condition. We need to remember that 1 crore and 10 crores. Now, there is a proviso over here. It says that just right now we learned that just to give benefit to the small scale people and your turnover is less than 2 crore rupees, then you can declare the profit as per presumptive taxation, 8%, 6%, whatever. Now you may say कि अरे ये तो 1 crore से ज्यादा जा रहा है, कैश रिसीट भी हमारे टेलर एग्जांपल में ज्यादा है, तो फिर then I have to do this tax audit. So then I have to do this tax audit. Tax audit means I have to keep all the maintained books of accounts as per 44 AA, and everything has to be done. Now what? Then they say, no, if you are a person who declares profit under section 44 AD and his turnover is less than 2 crores, then you are not applicable for tax, not applicable for tax audit. Okay, just try to understand all the conditions which I am trying to tell you. And at the end of the lecture, I'll just combine everything into a chart, so that I have given a huge chart wherein if the turnover is between 1.25, between 1 to 2, 2 to 10, everything I've explained it. So as of now, just try to understand what conditions I'm trying to tell you, and then we'll try to just club it all together and understand everything together. Okay. The first condition, 1 crore, 10 crores. Now a second condition comes in. If you are a person who is going to presumptive taxation, 2 crores. If you go under 44 ADA, no tax audit. Okay, clear? Next, you are a person carrying out the business under section 44 AE. You declare profit which is less than the minimum profit which has been prescribed, the 7,500 and 1,000. You show 6,000, 5,000, something like that. Then if you are showing profits which are lesser than that, then you have to do tax audit. Then even if you're going to the presumptive taxation, not going, does not matter. You have maintained the complete books of accounts, you have showing expenses, everything is there, and that expense, that profit is lesser than the minimum profit as prescribed under section 44 AE, and you have to go. You have to do tax audit, nothing to. Okay. Now under presumptive taxation, now 44A will keep it aside. We have already discussed two conditions, 1 crore, 10 crore, 2 crores wala, and this is the third one now. In this third one, AD, what it says that, for example, in 1 year, you take advantage of presumptive taxation under section 44 AD. Your turnover is also less than 2 crores, everything is correct. The provision has said that you take 8%. Okay, you take 8% now. Now next year you realize that, oh, if I actually maintain my books of accounts, if I actually understand, I used to feel कि अरे मोटा मोटी 10% होता है तो मैं 10% दिखा दे रहा था, 8% दिखा दे रहा था, whatever. Now if I actually sit and calculate, someone comes, put my tally accounts and everything, I understand कि वो अरे 2% ही हो रहा है. And why should I pay tax on the additional 6%? I am paying at 8%. Why should I pay? Actually, तो मेरा 2% पे है. Correct? So over there, the government says that, okay, year 1, you took advantage of the scheme. You did not show us the books, nothing. Now, if you go over here, next 5 years, go in 44AD, nothing to. So it is very important. And then if you don't go into this 5 years in 44AD, इस 5 years में अगर 1 साल गए तो next 5 years जाने का 44AD में. For example, you are taking AD in financial year 21-22 as per section 40. 22-23 this year you realize, array, my percentage is very low, 2%. Why should I go for 44AD? I will do the proper. Then they say, no, okay, then even if your turnover is less than 1 crore, 2 crore, whatever, you have to do your books, you have to do your audit now. For the next 5 years, compulsory audit. So from the years financial year 22-23 to 26-27, you will have to do audit. Yeah, 26-27 audit should be done. But they have given one small condition over here is that you do audit only if your income exceeds basic exemption limit. Now, for example, you are an individual. You understand that after showing 2%, my income drops to just 50,000 a year. That's it. I don't have any other income, nothing. Then they are saying कि ठीक है भाई, तू बहुत ही छोटा है. Your income is not even going more than the basic exemption limit, which is 250,000 for an individual. Then you are exempt from tax. Okay. Many conditions are there. I understand it is too much, but just take one thing at a time. I'll just repeat what I said over here. It's one thing over here is if you go into 44AD, remember next 5 years you have to go into 44AD. If your client chooses in any of the next 5 years not to go into 44AD, then tax audit will be applicable to him. If tax audit is, tax audit will be applicable if his income goes above basic exemption limit, that is 250,000 for individuals. Partnership firms is 0. Cooperative societies it's I think 20,000. So again, companies it is 0. So you have to, of course, for them 44AD is not applicable only. So let's not talk about that. But partnership firm is 0. HUF again 250, individuals 250. Okay. So understand this, that income should exceed the basic exemption limit, then tax audit is applicable to you. This is important too. Okay. Now, for professionals, if your business sales turnover is less than 50 lakh rupees, is more than 50 lakh rupees, very simple. 50 lakh से ज़्यादा turnover for a professional, tax audit applicable, खत्म. कुछ ये नहीं करना है, ज़्यादा difficulty नहीं है, nothing. 50 lakh से ज़्यादा turnover, खत्म. That's why it is very important. I'll go to my start of my lecture wherein I had differentiated to you what is business and what is profession. Because over here, it is very important. You classify a profession as a business and you say, nahi, 1 crore hai, 2 crore hai, you go into that and it is 60 lakhs. Actually, tax audit is applicable to it. And you are arguing 1 crore, 2 crore, 3 crores, no. Then you're going on a completely different wrong tangent. It has happened with my with my staff also many a time. They are taking professionals as businessmen and going with this 1 crore nahi hai, 2 crore nahi hai, aisa waisa nahi. Don't go into that. Just see the basics first. Whether it is, if it is this, then if it's a professional, then 60 lakhs or not, more than 50, go for tax audit. Khatam. Now, there is another case. Now, for example, you have a professional which is having turnover less than 50 lakhs and the profits which he is showing during the year are less than 50% of the gross receipts. Then also that person would be liable for tax audit. Two conditions over there. So 50 lakhs से ज़्यादा रहेगा compulsory tax audit, nothing doing. 50 lakhs से कम है but he is showing profits less than 50%, tax audit is applicable to him. Okay. Now I just forgot to discuss one point over here. This point regarding 5 successive years. Over here, what you need to do, कोई भी assessee का, you start doing work and you understand that you are going to do business. Before filing the income, always check the previous year's income also. It might happen that this is a new client to you and you don't know its previous history. Client doesn't understand this, 8%, 6%. The previous consultant must have done something. And you prepare his profit and loss, P&L, everything is properly done. And you do not check this condition. So always before filing, check his previous year returns and see whether 44AD was applied or not. If 44AD was applied, then check all the previous 5-6 years return. And whether these 5 years are done or not done. If you're in the 3rd year, then right now also you have to do 44AD only. Or else you would have to educate the client, telling him कि नहीं अभी अगर आपको book से जाने का है, then you would have to go and do tax audit for you. So on a practical level, very important for you to check the previous year returns. It might even happen that a client हमारे पास ही है, but you are new to the client. Some of your seniors who was doing 44AD returns for him, and now it has been given to you. So you check previous year returns first. 44AD में किया है क्या? नहीं ना किया है. हाँ ठीक है. Then what I'm doing is right. If 44AD में किया है, then okay. How do I go ahead with this? You ask your boss, you ask your principal, okay, these are the conditions. Last year 44AD में नहीं हुआ है. हमारा 5 years भी complete नहीं हुआ है. Tax audit होगा. After this, I understand that basic exemption limit से भी ज़्यादा जाएगा. So tax audit is applicable. We need to educate the client regarding this. Then the due date changes. Everything changes. Okay. So now, as we discuss, many checkpoints are there, right? There is a 5% checkpoint. There is a 44AD condition, etc. So what I have tried to do over here now, I have just tried to club it into this business. I have tried to club it over here, and profession is separate. As you see, profession is very simple. What we'll try to do now, can anyone see my mouse? We can see the mouse, so you can follow the mouse.
Yes, it can be seen, sir.
Yeah, perfect. Okay. So, see, tax audit, business. Let's go to the turnover criteria first. Let's see first for the people who are less than 1 crore. If any of your person is having gross receipts, turnover sales less than 1 crore, tax audit is not applicable to him. Just relax. Complexity is over here. If the turnover is between 1 crore and 2 crores. Firstly, what you need to check is whether the 5% criteria, the 5% criteria in the sense the 5% of his receipts or 5% of its 5% of his receipts or 5% of the payments have been received in cash or in check. If the 5% criteria is not breached, this one, it means the 5% criteria has not been breached. So your tax audit limit goes from 1 crore directly to 10 crores. Correct? So if the 5% criteria is not breached, even if you show it under 44 AD or you are showing it under 44 or not showing it under 44 AD, your tax audit is not applicable to you. Okay? Understood? Now, but in case where this 5% criteria is getting breached, you are basically receiving cash more than 5% or paying people in cash more than 5%, then your tax audit limit goes from 10 crores to 1 crore. Now, if you are doing it under 44 AD, then tax audit is not applicable to you. But if you are not showing the profit under 44 AD, then it is applicable to you. Okay, this is the turnover criteria. If you are between 2 crores to 10 crores, again, if the criteria of 5% is not being breached, then 10 crores not applicable. If the criteria is 5% is breached, then the tax audit limit is 1 crore applicable. More than 10 crores, you don't need to say anything. 44 AD is not applicable here, or 44 AD is not applicable here. So it's over here, it's quite plain vanilla, simple. Just check the turnover limits and go ahead. Another what we need to see is 44 AD. So you need to see turnover criteria, check this and see 44 AD and check whether 5 years have been breached or not. If yes, not applicable. If no, applicable. Okay. Tax audit for professionals, as we discussed, very simple. Less than 50 lakhs, profit less than 50 applicable, more than 50 not applicable, more than 50 applicable. Okay. Now coming to our last point. I don't know if you have asked this question to your principal or not, but many times I tell my interns, before going, I tell my interns that go do this tax audit of this person. They come asking me, sir, 3CA भरना है, 3CB भरना है. मतलब, as you know, there are two forms, 3CA and 3CD. 3CD is the general 44 plus points, and 3CA is your report, and 3CB is another kind of a report, and 3CD is also that. So many times, many of my interns come and ask me that, sir, 3CA भरना है कि 3CB भरना है. So I wanted to make you understand that what is the difference between 3CA, 3CD, and 3CB and 3CB. First, we'll just understand what is 3CA. 3CD जो है ना, 3CD. First, we'll see what is 3CD. 3CD है ना points. As per our guidance note, it's not an annexure, but 3CD is a point, is the huge form that we fill for all the interns who have you have done tax audits. 3CD is not your main report. Your main audit report in which you certify or you sign is 3CA or your 3CB. So basically 3CD is just an annexure of points which you say, this is there, this is not there, this is there, this is there. But it's like an annexure, kind of an annexure to your main audit report. And your main audit report is 3CA or 3CB, which you sign. And 3CD, actually, even as per our guidance note of ICAI, the clients needs to fill it to us and give it to us, and we need to just check that. That's it. So over here, 3CA and 3CB are our main audit reports. Now you would say that again, what is the difference between 3CA and 3CB? As a lot of my interns get confused that मैं 3CA भरूं या 3CB भरूं. Sir, last year 3CA भरा था. Yes, sir, मैं 3CB भरूं. No. So over here, before going to 3CA, 3CB, we need to understand provision in section 44AB. 44AB, it says that in case audit has been done by you under any other statute, not you, I'm sorry, if audit of the assessee has been done by any other statute, then you as a statutory auditor need not do an audit again and rely on that audit and just fill a form 3CD form. That is what the statute says. So what it means, I'll explain it to you with a practical example. What it means is basically, now for example, in companies, for all companies, there is no such problems, right? 2 crores, 3 crores, 1 crore, 10 crores, 44 AD, nothing like that. Yeah. Starting, say, 1 rupee income, 0 rupee income, no income, whatever, 0 assets. Still, statutory audit has to be done as per Companies Act 2013. So, for a company, an audit has already of the books of accounts have already been done. And as per this provision of 44 AB, it says that you don't need to do an audit again. You need to rely on the audit of the other person and fill up and verify your 3CD form. And for that audit, where the audit has been, where the audit is done, a separate audit has been done, you fill up form 3CA. So let us see the wording of 3CA, what it says. The report that the statutory audit of Messer Dash was conducted by me, us, or Messrs. So it can be a case that you are the statutory auditor or the tax auditor. But in the case where you are not the statutory auditor, you would say that the maybe, for example, Deloitte is doing the statutory audit. So statutory audit was conducted by Messrs Deloitte in pursuance of the provisions of Companies Act, and an annex here to a copy of my hours theirs. So it will be their audit report dated whatever, along with a copy of each audited year as on ending and the accounts declared. So over here, my audit report says that the statement of the particular required are furnished annexed herewith. Over here also it says annexed, correct? Annexed herewith. And in my opinion, best of the information, all the explanations given is correct, except for all this. So basically what it's saying over here is that you don't need to do the audit again. You can rely upon the audit report of the other people. So that's why if any other audit has already been concluded, it can be under the Companies Act, it can be under the Maharashtra Cooperative Society Act, or any other act. If any other audit has been done, then you go to form 3CA. Whereas if no such audit has been done, for example, a doctor, or as individual doctor, a doctor does not have a statutory audit, then you go to form 3CB, wherein you are doing the audit of the assessee. And then over here you say, we have examined the balance sheet as on this, profit and loss, expenditure attached herewith, etc. And I certify that the balance sheet, profit and loss, etc. are in agreement with the books of accounts. So over here, you are doing the audit. And this is the major difference between 3CA and 3CB. So next time when your principal tells you, okay, go and do an audit of this or fill the tax audit report, whether you take a 3CA or you take a 3CB, this is the major difference. You check whether a separate audit under any separate has been done. Have we done it, or someone else has done it? If it is a company's, then it is a 3CA, nothing doing for it. If it's not, then you go for 3CB. Okay. So with this, I think I have concluded all the points. And I have tried over here to take in a lot of things, but I've tried to give you a big overview, because it's a first lecture of in business and profession. I've just tried to give you an overview of how PGBP is and covered some important sections such as presumptive taxation and audit, which are a very important part of PGBP income, PGBP head. So that's what I have tried to cover here. Hopefully I have done a good job and I have added a lot of value to you and discuss practical scenarios. We can have questions right now, but in case you want to ask any other questions, you can note down my email ID and my number. You can WhatsApp me and email me as well. Just phone I may not take, but you can always keep a message. I will reply to you whenever I get time. Yeah. Thank you.
Thank you, Aditya sir. Now I would like to invite CA Yogesh Pankhaji, who is the co-opted member of SSCB as well as Direct Tax Committee. Not taking much of your time, Yogesh sir, please, you are invited.
Madam, just excuse me for a moment, yeah, please.
Yes, sir, sure.
Thank you.
Hello.
Yogesh sir, please ask the questions.
I think Aditya is not here. He has taken a minute's leave. Shall we wait for him to join in?
Yes, sir. We should wait.
The presentation of Aditya Pradhan, it's very lucid, very lucid, very understandable. He connected with the students, and there has been many takeaway from his presentations. And the kind of PPT he made, it was self-understandable. And the voice modality and all, it was very good to listen to him, and he has taken out some real good points as far as depreciation is concerned, and 3CA 3CB is concerned, then presumptive and tax audits are concerned. I hope the students would have noted it down. Smita, it will be good if you can just email the presentations to the students who have attended the program.
Sure, sir.
Because it's a very fine presentation which has been done by Aditya. Aditya has taken lots of efforts to make the presentation. Aditya, you were very good and we were all ears to you. We really enjoyed listening to you. There have been few questions, Aditya, if you can, should I pose them to you?
Yes, please, sure.
Okay. The first question is, can a trading loss as in a normal business trading loss or trading in iron and steel, be set off against intraday transactions, profit from intraday transactions?
Intraday transactions, I think so. They will be coming under speculation business.
Yes.
So speculation or any non-speculation loss, I don't think so. They can be
set off against the speculative gain.
Correct.
Yes. Right. Truly said. Okay. The next question is, there has been a AC air conditioner installed by a doctor. Okay. In her clinic. Whether the depreciation shall be charged under plant and machinery or furniture and fitting, including electrical fittings.
No, I think so. It should go under plant and machinery.
Yes. I too am of the same opinion. Okay, the next question is from Mr. Mr. Mangal wanted to start a gold chain facility in Jharkhand. For this purpose, he acquired land of rupees 70 lakhs.
Okay.
And building of rupees 1.5 crore. He is eager to determine deduction under section 35AD.
Okay.
So will he be able to claim 100% deduction of land and building, or only the building, sir?
I think so. It's for only building, but I need to brush up my 35AD.
It's only for building. It's only for building.
Not for land. Yeah.
It's only, he'll be able to get deduction of only 1.5 crore.
1.5 crore.
Which will be for the only for the purpose of building. Okay. The another question is, Mr. Param has started his new business in Ludhiana, Punjab.
Okay.
He is not much aware about the provisions of the various laws.
Okay.
Owing to Section 135 of the Companies Act 2013, he spent 80 lakhs as CSR expense and claimed deduction in income tax. Can Mr. Param claim the same?
No.
Because he has to have those, threshold criteria to be
threshold
fulfilled.
criteria and everything.
And since it is the first year, I don't think so that CSR.
Yes.
So he won't be able to claim it as a business expense?
No, I don't think so. I mean, if you can throw some light on it.
Okay, the next question we have. Just a sec. I'm just scrolling down some relevant questions.
Yes, please.
Okay, Mr. Jagdish paid a salary of rupees 18 lakh to one of his employee during the previous year, 21-22, and claimed the same in his profit and loss account. Mr. Anil filed his return of income on 28th of July, well before the due date, and paying the entire amount of income tax on the very same day. Discuss repercussions in the hands of Mr. Jagdish. I mean, what I am analyzing the question is Mr. Jagdish has not complied with the provisions of TDS.
Yeah, correct.
So since he has paid salary of 18 lakhs to one employee, will that deduction be allowable to him?
Now, over here, since the TDS has not been deducted by him, he becomes SSC in default. However, the proviso to the relevant section says that in case the person has shown the income in his income tax return and he gives a declaration saying that all the income has been shown, then he doesn't become an SSC in default.
Okay.
So, and then, but over here, if he doesn't become an SSC in default, he would be, no penalty provisions would be there on him. But then again, maybe under section 40A IA, he will be disallowed. If Yogesh, you can put some light on it.
Sorry?
If you can put some light on it. I think so. The deduction, the salary would be 30% would be disallowed, but he would not be an SSC in default.
Yes, because he is also not liable to the provisions of tax audit.
Correct.
Okay.
Yeah, correct. Okay, that is also one thing we need to see. Unless and until his profession income is more than 50 lakhs or business is more than 1 crore. Correct.
So will it be disallowed? It will be allowed.
It will not be disallowed because his business is not.
Okay. I guess we'll take this last question. Just a minute. I'm just scrolling down. There is one small question. Mr. Dev, a newly qualified chartered accountant, started his new office in Mumbai along with his friend CS Jigar Madan and CMA Deepak Agarwal in the name of JDA and Associates LLP. Since the turnover in the first year was only 75 lakhs, they wanted to claim 44AD. One is a chartered accountant, one is a company secretary, and one is a CMA. But in my opinion, they should fall under the group professionals and not business.
Yes.
And the turnover is like the gross receipts is around 75 lakhs. Either they opt for 44 ADA or no, they cannot opt for 44
They
ADA.
cannot
They have to go for
tax audit.
Tax audit. So 44 ADA is not a question. 44 AD is not applicable to them.
Profession of accountancy and company secretary is again covered specifically as per the provisions at 44A.
Yes.
So
44 ADA. So 44 ADA is not applicable to them.
Correct. No, it should not be applicable.
It's been a lovely listening to you. We have taken everybody has taken something or the other from your presentations and the lucid manner you deliberated. It's always, happy to hear to you. Thank you.
Thank you so much.
It's been such a lovely listening to you.
Thank you.
Very good presentation. I must tell you, very good presentation.
Thank you so much.
Thank you. Smita, Kapilji, shall we close it over here?
Yes, sir.
Thank you, students, for joining in, and a very happy Independence Day to all of you. Thank you.
Sir, I would like to, on behalf of SSCB, I would like to thank everyone who is present here. And I would especially like to thank our dignitaries, C. Aditya Pradhanji and C. A. Yogesh Mankaji, for this wonderful session. And I would like to express my gratitude to our eminent speaker, C. Aditya Pradhanji, for his presence and contribution to make this webinar a great success. I would like to express a sincere thanks for giving an excellent coverage to the topic, PGBP, encouraging us with your words of wisdom and enhancing the knowledge and lucid view to the students. I would also like to thank the organizing team, volunteers who are working hard every day and every weekend to make this series of webinars successful day by day. I congratulate all the participants for their active participation. Thank you, everyone. I would like to announce that all the recordings and PPTs will be hosted on DLH platform, and the recording will be available on the ICI YouTube also for your reference in future. Thank you. Thanks a lot, sir. We would like to end this session. Thank you, sir.
Thank you, everyone. Thank you.